We are the 14th of May 2026, and I'm making this tutorial video to go over how to use the templates for the Smart Business Plan. Now, there are two versions of the template. There's a free version and the advanced version. This tutorial will cover both. The difference will be that in the free version, you won't have the save and load version and this extra tab called versions. But we'll do this portion at the end. So it's like if you could just use the free version and you can just skip the last portion, which goes over the versions. Now, before we start, I put some links in this product sheet where you can get both of these templates. I would suggest you go and get one, either the free or advanced version. Well, ideally start with the free one, right? The first rule of financial discipline is don't spend money you're not sure you need to. And so start with the free version, go through this tutorial, see if it meets your needs. And if ever you really need the advanced version, then go and purchase that one. So let's get started. So how to use this template. Now, it's quite simple. The idea here is that you can have a lot of inputs, which you're going to put into these green cells, and it's going to give you an output here in the blue tabs, where you're going to have a P&L, so a profit and loss, by quarter, by year, and we will see how all of this works. So say you have a project, the first step is to fill in what's the start year and the start quarter. So we're in 2026, and I think my project's going to start in Q3 of 2026. I think that's the first parameters you'll need to put in. Once that's done, we can go straight to the products tab. So here in the products tab, the whole point is that you're going to put in what products you decide to sell. It could be anything. It could be shoes, could be a coffee shop, and you put in your different drinks. But in this case, I'm just using electronic components just because it's quite simple. But basically anything can be used. So this product tab basically breaks down into multiple sections. You can see which is in between these two thick black lines. And here you will be able to put in one product at a time, right? I think there's 20 lines in case you have 20 products. But we're going to go through just a few just to see how all this works. So I'm going to make my first product here, give it a name, and you'll see every time you click on the cell, there's this comment section, which basically tells you what needs to go in there. So basically here, let's make our first name. I'm going to make an integrated circuit board. Okay, quantity. So basically this tab here tells me, this cell tells me to activate it, 1 or 0. So I want to activate it. Payment terms. So typically what, your customer, how long your customer takes to pay you. So here I'm going to put 30 days. It's a typical time. If you're, opening a coffee shop or a bar or whatever, and you want to put drinks, payment terms is usually 0, right? Because people pay you right away. Okay, but in this case, I want to put some payment terms in. So what you can do here after is align units sold. So how many of these units are you going to sell over the given time frame in Q3 2026, right? That's our start date, remember, that we selected, and for each subsequent quarter. So for this first product, I'm going to say I'm selling 25,000 parts a quarter for an average price, let's say, of $4, right? Now I'm going to make some assumptions. You can see that every quarter there's a pricing value, and we're going to make the assumption that every year I'm going to have some inflation, right? So I've negotiated with my customer that I can multiply the price by 1.04, so a 4% increase every year. And I can do that basically every quarter. So let's just copy that in. And every year the price goes up by 4%. Now let's just do that. It kind of looks like this. Okay, that makes sense. Yeah, so every year I get a new price increase. Now next you're going to put in your cost. All right, so this area here is all to put in the cost related to that sales value. But before we do that, there's this button called calculate, and you'll find it in all of the green tabs. You can calculate here, you can calculate here, and when you hit calculate, it's going to take these figures and calculate them here in the blue tabs. And let's take a look what it's done. So here you can see in my profit and loss statement, you get your quantities and you get your sales, right? So it's basically quite simple here for the moment, just calculating these items. Now, if I put in my products, right, and here I'm going to copy paste all my products. Here you can basically put some quantities, and let's just put some quantities for now, right? 1. And we'll see about advanced cost later. Similarly, you have payment terms with your supplier, right? That needs to be filled in there. Now we'll see this purple column later. And then you're also going to have some cost. Now, similar to the sales, you would put these costs in as such, right? So here I have, some inflation as well. I mean, you can see here that they're kind of hard coded, but you could have put them in with a percentage the same way the sales work, right? Okay. But I think I might have some in here. Yes. See, for example, this integrated circuit here is going up by 3% every year. But you can fill in however you see your material evolve. What this gives me here, you can see, is a unit material cost, right? So price and material. What's the percentage of the material to sales? If I calculate that, you can see now I get this material line filled in. All right. Oh, let's toggle up. Let's hide the blank columns. You can see here that you get the sum of your project over this lifetime I've planned. I got all my sales, my quantities, material consumption, and so forth. Okay. So you have this other area here, which I call other unit direct cost, right? In this case, I'm just going to put scrap. All right. So similarly, this can work with some inflation, right? But here, it's just going to take 2% of the material cost. All right. So that's one way of putting scrap in. I could have put scrap here in this area here, but the difference is this one does not have payment terms. The other unit direct cost. Now, in my industry, we typically know how much labor we spend per part, so you could technically put direct labor here, depending on your industry, right? I mean, some industries, it's very difficult to see this. Like, for example, if you're a coffee shop and you have a barista, you can't put this here because you don't really have the same, let's say, industrial planning that we might have in a workshop. And so basically that allows you to put some extra cost. So let's calculate that. And here in your P&L by quarter, you will see that you get your material cost, other direct cost, your variable margin, very important. And you can see that your variable margin over time fluctuates depending on the inflation of your sales and your cost. So that allows you here to already start by getting up to your variable margin, right? And what comes below here, we're going to jump into that in a bit. We're going to go into indirect cost. Now, in indirect cost, it's everything else, right? And if you cannot, for example, as we were talking about earlier, plan your labor by part or by part produced, right, in your workshop, then typically you'd put your salaries here, right? And so here, for example, I'm going to throw in a bunch of costs. So let's say I'm going to put in some salaries, right? So here I have a senior salary and a junior salary. Let's say I have 2 people in my workshop. Does this have a cash impact? So typically you can put yes. If you put no, you'll just get depreciation, but you won't get cash flow, right? So this is most of the time it's yes, right? You have rare cases. And the rare case would be when you have a machine that you already own, that you don't have to pay for, but you still want to count its replacement cost. How many quarters does this get depreciated over? By default 1, right? We'll see about this when we get to CapEx. And here, I want to throw in some salaries, right? So let's throw in some salaries, right? So every quarter, the senior guy is costing me $20,000, and the junior guy is costing me $15,000. Okay. So let's make some CapEx. So let's say I need a machine to mount my PCBs, an inspecting machine. I mean, depending on your industry, this can be anything. Does it have a cash impact? Absolutely. I got to purchase them. But here's where I might be able to depreciate, right? So typical for machines, we tend to have tax laws, at least in most countries, where you need to depreciate it over time, right? And typically 5 years I put here. Which could be different depending on your jurisdiction. And let's put in some cost of how much these will cost me. So I'm expecting this to cost me that much. And then let's throw in some extra costs. I mean, this is a shop floor after all. I need a shop floor maintenance, rent, utilities, insurance, right? These are all like salaries going to be on a 1 year, on a 1 quarter by quarter payment. It's not depreciated, right? There you go. So here I have all my fixed costs in. Now, if I run the calculation, you go here to P&L by quarter, you'll see that in this area, you have indirect costs excluding depreciation and depreciation. The difference is that the 550 here is linked to the 550 here, right? The template can tell which items are CapEx and for depreciation because they have more than 1 quarter depreciation, right? And all the rest are considered as other indirect cost. And with all of this, you will get your pre-tax profit, which you can see here is very negative because, well, my fixed costs are so much higher than my variable margin. So we need more sales. A typical thing you may hear in any business. So let's go back to products, and this is where we're going to make things a bit more complex. We're going to make a second product, right? And so let me do that. So let's call this one integrated circuit board 2. Similar 1 and 30 days of payment terms. This one is going to have quantities a bit lower, right? So you can see that it's slightly lower, and also a much higher price because it's a different one. Let's fill in some cost data. So obviously you do this line by line here. I'm just copy pasting from my other worksheet. And here I get basically my whole cost. Let's add some scrap. All right. Okay. There you go. And so here now I have my second product. When I calculate, what's happening now is that in the P&L, it's taking both products. All right. So you can see I have much more sales because both products, the integrated circuit board and the number 2, they're all being calculated here. And if you look now, do we have enough variable margin to cover the cost? Looks like we do, right? 2.6 million indirect cost, pre-tax profit. Oh, and no corporate tax. That's something we need to fill in. So obviously Uncle Sam will be there at every turn. So depending again on your jurisdiction, your company, you may have a different corporate tax rate, so typically you'd want to put that in. Where's my calculate? So, sorry, let's calculate. And there you can see that you get your added corporate tax, right? Then you can get your net income. So this basically template has taken our 2 products or indirect cost. We've been able to throw them into this template, and it makes us a net income projection, which is very necessary for business steering. Before we move on to this part below, right, you can see that you get the same thing here in unit value. Let's toggle those quarters just to have an idea of how it looks per unit, right? So it just divides everything by quantities. And then you get a P&L by year, right? If you want to see it by year instead of by quarter, you can look at it here, right? It's the same data, it's just by year. And of course you get P&L year by unit, okay? So that's already not bad, right? You already have your net income, but we also want to look at your cash flow. And this is very important. If you're gonna go talk to the bank about your project, you're definitely going to need to plan your cash flow, not just your net income. And this kind of calculates with multiple parameters that we're going to go through. For those who are not extremely savvy in accounting principles and all these things, don't worry, we're going to walk through it. Typically, the difference between net income and cash is that cash is actually simpler, I'd put it that way. What goes in and out of your bank account. And when you talk to your bank, this is typically what they're most interested in. While net income, right, is let's say an accounting fabrication that allows us not only to steer our business, but also it's mostly for taxes, right? Okay, but you need both. So depreciation, typically something we take out from the cash flow, right? Oh, before that. So we start by calculating cash flow by taking the net income. We remove depreciation because depreciation is not a cash flow. Cash doesn't move when you depreciate, and we replace it with CapEx, right? So we basically take the same amount and we just put it back in the first year. So this template does that. Oh, we have inventory carry, which we haven't done. And this is here in the dashboard, inventory carry. This is typically how, I mean, it's an estimate because it's really hard to know what your real inventory carry is. It's how long does inventory stay in your, let's say your workshop, right? You buy something, how long does it take before it becomes a finished product and gets sold? Typically, it's quite easy to picture in a workshop, right? You buy materials, they come in, they get delivered, they stay there in your inventory, you wait, then they get assembled into a final product, and they may not be sold right away, they may sit longer in your inventory. And that will take some time and financing cost. So let's put 10 days, right? Quite lean. And this applies to every kind of business, right? Even if you're opening a coffee shop, right? You're gonna have to buy your milk, sugar, coffee grains ahead of time, right? And they may sit in your inventory for 2 to 3 days before you sell them. This has financing costs because you have to pay for that inventory up front. So let's calculate. And you can see that inventory carry gets added, right? Okay, so it's neutral in terms of income, but it's not neutral in terms of cash, as you can see, right? This really depends on your business, how it goes up and down. Receivables, so it's customer receivables. You remember we put here in products 30 days. So it's calculating how much cash you'll have to, working capital, right? You have to keep in order to, while waiting for your payment. This has a big impact on your cash. And payables, right? Which we actually put here in our materials. And that has, of course, the opposite effect. If you can pay your suppliers later, it's less of a cash burden. So basically you get all these items and you get a cash flow, and you can see that for our business. So we make the same amount of cash flow as we make profit. It's just that the timing of it's very different. You can see the net income here versus the cash flow, which here I have to make a huge effort, right? I need $550,000 this first quarter. And then after, it kind of just becomes positive, cash flows in. So this is what you may need to negotiate with your bank. You can go to the bank and say, hey, I need $550,000. This is my project, and this is my cash flow, how it's going to come back over the years. And this is where you can start to discuss. Now, moving on to, let's say, more scientific financial concepts, which you may or may not be comfortable with. And I'm not going to go into too much detail here because this is a whole course on what these are. There's something called a discounted cash flow, right? You could call it inflation, you can call it the interest rate, but typically, banks or your finance expert, right? And if you are a finance expert, you definitely know what this is. I've put it here, right? And let's say I'm discounting at 10%. Some people call it also the, 10% yearly, right? And you'll find it here in the P&L, the yearly P&L, 10%. Some people call this the opportunity cost, right? Which I think is quite a good way to look at it. When I calculate, you can see that it's going to discount my cash flow. So if it was 10% yearly, it's 2.5% quarterly. And it's going to discount it, right? The value of my cash flow is going to be less and less every quarter. And you can see that discounted at 2.5 quarterly, $547,000 is only worth $261,000 today, right? And you also have here the internal rate of return. That's also would be a whole course to explain this. But basically, yeah, for your financial professional, they'll know what that is. And that's calculated there as well. So that's basically it for the simple template parts. And the last section we haven't looked is this advanced cost. So let's do that advanced cost. So in advanced cost, the idea is that you may realize that between these two parts, you may actually have some similar components, right? You can see like the blank circuit board, all right? What else have I got? I got this common resistor here, all right? And I may also have this common capacitor. And so in advanced cost, you don't need to enter them for each product. You can just go to advanced cost, and I can throw in my blank circuit board, all right? I can set my payment terms here. And you know, I may say I'll be purchasing my blank circuit board for this amount, all right? And to do this, you just need to put here a tag, right? It's a 3-letter tag in AC, so I'll call it PCB. And what's practical now is if I go back to products, and I go to my blank circuit board and I put PCB, right? What's going to happen? Let's erase this just to show you what happens. All right. Now when I run my AC, bam, it's going to populate it with what's in this sheet. And you can see it's taking for these exactly the quantities. Sorry, let's put that one. Exact quantities here, right? I mean the prices that we had here in advanced costs. What it also did, you can see that it's also populated here the quantities. So you don't have to go to products and sum up these quantities plus these quantities. It goes here and calculates those quantities. Okay. So let's do that for two other parts. Common capacitor. Okay. And you can see here if I run, well, actually it won't work because I need to put the tags. So common resistor, RES. And what did I call this one? CAP. CAP. So let's do this for both here. Common capacitor. And here when I run this, you can see that, bam, it gets my quantities. Also in advanced cost, you could go into your products. Maybe I need 2 common capacitors here in this one, right? And when I run that, it's going to double the cost. All right, so you can start putting quantities in the quantity area. And in the advanced cost, it's going to calculate a higher quantity, right? So this is quite useful because now you can just, for your purchasing, look at this page instead of having to sum up everything here. So that's it for advanced cost, right? When you calculate again, this time it will take the new cost and will update your P&L. So there you have it, and that's all in the free version. And so that if basically you're stopping with the free version, you can stop here. And the next section we'll look at now is how do you use these versions, save and load versions. And we're going to look at this in a second. All right. So let's say that this is your base case. All right. You think this is how your project's going to look like. You want to move with this. That's totally fine. So you'd go here into your dashboard. You could save your version. And so here basically it's going to say save version 1. I'm going to call it base case. Okay. Let it run a bit. Version saved. And so now once you've saved your version, you can actually go here and look in versions, and you're going to have your base case here. All right, this is your quarterly. Well, these are quarterly. The rest is the whole. It's the whole P&L, right? So you can see quantity is 930, quantity is 930. Right. So yeah, if I was saying confusing things about whether it's quarterly, it's just that the cash flow items, those 2 financial metrics are quarterly. Okay, so that allows me to have my base case. And this is quite useful because now when you go into dashboard and let's say I decide to erase all cells. Yes. Bam, everything's cleared. I don't have my data in here anymore. Oh no. Well, it's not a problem because you can always go on load version and I'd select my base case and load it back. Okay, there you go. And you can see here that I now have my project loaded back. Okay. Now, what's useful about this is now I may ask myself, if I lower my pricing, and will this, increase my volume, right? So basically, I'm making this economic decision. I'm going to lower my pricing and see if I can get more quantities. So I'm going to want to, let's say, lower my pricing to 3.5. Let's do this here. Rest adjusts. And here I'm going to lower it to 6. And what happens is that by doing that, I may get, instead of 25,000 parts, I may get 35,000 parts. Is that worth it? And then here, units sold. Let's bring this one down to, I don't know, 6,000. And then here, let's move to 8,000. Yeah, so have a ramp up curve there. This one 15. Okay, so I've done that. Now I can calculate. Now, of course, I'm going to see a new P&L here. Right, you can see quantities are higher. And then I can go back here and save version. And it's going to say, do you want to overwrite the existing version or do you want a new one? Here I want a new one. This is version 2, so I'm going to put lower pricing. Okay, and that's going to save it as version 2. Right, and so now if I go in versions here, I can see that I have a version 1 and I have a version 2, and you'll be able to compare them. So how much net income? Not that great. How's my cash flow? It actually looks worse with lower pricing, so it's not something I want to do. Now I can also do the opposite. Maybe I want to put higher pricing, right? So same, you go back to the dashboard. Let's go back and load my base case. Okay. And here in my base case, you would go back to my products, right? So I'm back on version 1. I'm going to increase pricing. Let's put that to 5. No, let's put 450. Stay within reasonable. This would go down to 20,000, right? Because if I increase my prices, quantities will be lower. So let's do 750, and here let's increase this to, so let's do 15, no, 500. All right. And in here, 25,000. So similar here, I can calculate, all right? And then I basically see my new P&L. Now, to note, typically when you change your pricing and your quantities, your purchasing costs may go down, right? And this is something you need to take into account, right? Depending on your business. But typically here, since my quantities are going up, right? Let me run my AC just to check, right? Maybe I can negotiate some lower pricing on some of these items, right? And this is something you may want to consider. I don't know, here, let's put this with 0.4 because quantities went up. Okay, these are really quite low, but who knows? Let's put this at 4, right? There you go, let's calculate that. Although, what did we do here? Oh no, we lowered quantities. Damn, so it should be the other way around. So this might go up, right? So yeah, I'm not paying attention here. So calculate, and this will give me a new P&L. I can again now save this one as a new version. I'm going to call this one higher pricing. Okay, let's give it a second to save. And now I will have a new version which has higher pricing. Actually, we didn't lose that much quantity, did we? Didn't lower it that much, did I now? I thought I did. Okay. Let's take it down a bit to be more realistic. Oops. Okay, let's put it down to 10. 20. Okay. Up. So calculate. All right, and let's save it. This time We want to overwrite version 3. Yes, still want to call it higher pricing. Okay, and now let's look at my versions. You can see I got, quantities. Oh, okay, I might have overdone it here. Anyways, you get the idea. So basically, yeah, if I increase my prices but collapse my quantities, obviously things look absolutely terrible, but that's one way. In any case, you can freely go between loading and saving versions here, right? Just to go back and forth between them. This allows you to select a scenario, all within the same template, that can help you go. Now, the other usefulness of it, right, is let's say I decide to go with my base case, and that is how I established my pricing. I started my project, and I want to follow up now on this business, right? Because this was the plan, and now I want to make a close. Let's say that I've finally closed Q3, and I want to see how this evolved over time, right? So maybe in Q3, I've only sold, 18,000, some random number, right? That's how reality is. And I think basically this would be caught up in the next quarter, right? We could do that like this. I realized my quantities might have been too high, too ambitious for this one, right? So that would be a change. Material cost might have been very different. Finally, I managed to get this PCB at 0.4 because purchasing did a great job, right? So many things change over time. So you may want to advance this. Maybe my scrap was at 3% instead of 4%, right? For this part. Many things may change over time, right? Maybe, the guy selling this connector here doesn't want to do it for 30 days, has to be 15. So you can get all these changes happening. I would calculate that, right? And see how this changes. Oh yeah, and of course here in the fixed cost, I may realize that I forgot to put salary inflation, right? And my employees are coming in saying, hey, I'd like a yearly raise, right? Yeah, that happens, right? I mean, that's part of life. And so basically, that might have been forgotten in the initial calculation, right? So you do that. Maybe finally rent was much cheaper. I mean, you can plan all kinds of things that might have changed. I managed to get this inspection machine for a lot cheaper. I mean, you can do all these things, right? Oops, not that cheaper. And basically, once I calculate, I'm going to get a new P&L. All right, you can see that here. And what I would do now is that I'd go into my dashboard and I'd save this version. I'd want to make a new version, be version 4 now, and I'd call this one Q3 2026 closing. All right, it's the update on my project. All right, there you go. And now I could check my versions and see that finally, wow, my estimate on quantities was completely off, and I'm not doing so well at the moment, right, in terms of quantities. Obviously, material costs go down because of it. My variable margin is a bit higher. Okay, great. But then my fixed costs stay flat, and that's really hurting my business, right? So you can see how finally Q3 was versus the base case. And then I would go on. Maybe now I'm going to plan some corrective actions in Q4, right? Maybe I decide to increase my pricing or manage to negotiate higher pricing without hurting quantities. Just to be able to offset this. I got my market data wrong, right? And so I'd make those changes. I'd basically figure out how to make things work with much lower utilities, right? Oops, sorry, I can't change Q3 anymore. Right, oops. And so, you do some actions. You can then calculate that. And then here, I'd save it as another version, right? And this would be version 5, and call it Q4 2026 closing. And you can do this every quarter to track your project. There you go. And here you can see, yes, my corrective actions did help. Quantities are not there, but my pricing was, and I'm not yet on the level I planned, but we're making progress. And then you can track this every quarter. So that's basically it. All right. If you have any questions, I've put my contact info in this tab here, info. All right. where I'll also put the link, right? I mean, I'm filming this video right now, but when it's done, I'll put the link here. And you can also contact me via the platform you got this template from. Anyways, that's it, folks. Hope you have a wonderful time planning your projects.